All right, welcome, my favorite people. The moment you've been waiting is finally here. I am so excited because it's an honor and privilege to share this time-sensitive information with you. So if you're watching this right now, eliminate all distractions. If you got kids, time to a tree if you got to. But I'm telling you, you're definitely going to want to have a note and pad ready, because we're going to dive into some real strategies that you can basically apply today. And what we are trying to achieve today is to show you why we believe that there's an economic crash that's about to happen around the corner, and show you not only how you can survive this crash, but also thrive in it. And we're actually going to be diving deep. I have a very special guest today. We're going to be giving you the exact strategies that you can apply today so that you can actually take back control of your financial future. So I'm just going to go ahead and share my slides. So welcome, and I hope you enjoy the presentation. All right. So let's go right into it. Today, you're going to learn how to profit in the up-and-coming economic crash without actually having to watch the markets 24/7. Okay, now our goal is basically, by the end of this webinar, you will have joined the top 1% of traders in the world. And this is by showing you the information that not even 99% of investors know. Now, if you do stay till the end, I have a very special gift for you. We're going to be giving you a free link to download our training guide that's going to teach you the top 10 mistakes that investors make and how to actually avoid them. Now, you'll basically be, what I'm going to promise you is you're going to be the top 1% of all traders without having to watch the markets 24/7. We'll show you exactly how to do that. Okay. Now, we have trading strategies and systems to consistently outperform the markets. And yes, they are built with the newbie and intermediate, even the sophisticated trader in mind. So if you're just starting out, don't worry, we got your back. Now, this strategy actually took 2 decades to develop, okay? It's all compiled in an easy, simple to follow step-by-step instructions. We're going to take that learning curve from decades to just months, okay? We're going to hold your hand and show you how to avoid all the common mistakes. Now, you might ask, okay, well, what makes this different? Okay, now I need you to have your attention, because otherwise you're going to miss some important information. So this is what makes us stand out. If you don't have experience, that is not a problem. We're going to help you avoid the most common mistakes that even most trading experts never actually teach you. And I'll also share with you how it's possible for one of our students with no previous success or experience make $5,000 profit in just 6 months. In fact, Vince started trading with Robert with just $10,000 about a decade ago, and now he's making $5,000 profit in a matter of minutes. So I just wanted to congratulate Vince Law for your success. As you can see here in the red box, he says, I already made $5,000 in short 6 minutes. And then he says 6,000, I have a 6-digit portfolio, and then and 100,000 within just 3 weeks. So you can see this is a live screenshot of their chat between Vince and Robert. I'll also share with you how to set up your foundation the correct way from the start. And these are some issues that most traders overlook and can actually cause you thousands of dollars. Okay, we're going to help you avoid opening a trading account with the wrong brokerage that are basically overpaid. I'll also share with you basically how to avoid the biggest tax mistakes when you're opening up an account. In fact, if you do this the wrong way, you could be actually taxed 50% versus doing this the right way, where you could be taxed only 15%. Okay, so that's what is known the corporate tax rate versus the personal tax rate. So we'll show you how to do that. So you definitely want to stick to the very end. I'll also share with you what the banks don't want you to know and how you can actually outperform the results they get you. Pretty phenomenal stuff. Now, if you're excited, drop a comment down below. Stay engaged with us, because this is the time to ask questions and get your answer. Now, without further ado, I'm going to introduce to you Robert Patek. So I'm just going ahead and stop sharing my screen so we can have him join the conversation. Give me just one moment here. All right, Robert, welcome. We're so excited to have you here.
Hey, Iulia, how are you?
Doing fantastic. Can you just share your face with us before you go dive into the screen share so we can have a chance to meet you?
Yeah. Should be
just stop sharing the screen down below.
Okay. There you go.
Thank you.
Hey, everybody. How are you? Nice to meet you all. Excited to be here on this live with you and Iulia and share all my secrets that I've accumulated over my entire life, watching the markets and, help you cut down the time it takes to catch up to all the things I've seen. Sometimes I've been watching for over 20 years and, I like to help when I'm able to cut down the learning curve from a couple decades down to like a couple months. So that's what we're going to talk about today. We're going to see some of the things I saw in the past, as well as some of the stuff I'm seeing today that's relevant in today's market that you definitely don't want to miss out on. We're going to talk now about the go into my slides here. So I'm going to share my screen and share with you some information that I have right now. All right, so who am I? So my name is Robert Patek. I'm president and CEO of International Institute of Investing, Inc. And this is a company I incorporated quite a while ago. I never launched any products or services or websites. I ended up dissolving the business. But today I felt the need to share this, that we've reincorporated this year. Because I've been watching the markets since the dot-com bubble. Actually, I've been trading since the dot-com bubble, not just watching. So I've lost a lot of money back then in the late 90s, but I've also won competition, first place in the world, trading through a $100,000 simulation account where you had to pick maximum or minimum rather 4 stocks. So you couldn't only put 25% of your account in one particular stock. So you had to at least pick 4 stocks at a time to win that particular competition. I've also predicted the recession. So back in 2006 and 7, I was actually doing seminars in Vancouver and warning people about what I called at the time, quote, the greatest depression in the history of Earth ever within the next 2 to 24 months, end quote. So people were confused what I was talking about because everything seemed to be going up. That's a picture of me actually in that seminar. That's in particular one is in Holiday in Metrotown. And I was talking about how prices are moving. Like you can see the shape of my hand is the same shape as the chart. And I was warning people that it may not continue on that path. And then I slammed my hand down on the table saying we were about to have a big crash. So people were confused because real estate was going up, stocks were going up, everything was looking rosy. And I said, no, get out of the markets, get on the sidelines. I did this publicly in front of a room full of people. So fast forward a year later, I incorporated on January 2008 International Institute of Investing. It took me 6 months to actually come up with the name, believe it or not. But all of 2008, if you recall, the markets had crashed. So I've also predicted real estate market tops and bottoms and Bitcoin peaks, which we'll get into. And so for 1 year in 2016, I actually wrote for a New York publication, which was right across the street from the Wall Street Bull, was their office. And I took their traffic from their website from the 1 millionth largest website down to the 100,000th biggest website within a 12-month span. Some of my predictions have gone up 300% in 6 months during those publications, which I did technical analysis for them. So here's what I want to stress. Today, April 18th, rather, 2018, I reincorporated this company name for the exact same reason I incorporated it in January of 2008, which was precisely to warn people what I see coming, and we're basically about to go off a cliff in terms of the global economy. So just to give you an example, I'm known for giving the truth and telling it how it is. So I'm not worried about, just like I was in this picture in 2008 or in 7, not worried about offending people's stance of what they're believing is happening in the economy. I told what I saw, whether people like me or not. Unfortunately, a lot of people didn't take action on my news. Hopefully, this time around, a lot more people will protect themselves and get out of the markets, or even learn how to profit from them while they're dropping. So this is what I'm going to promise you today. I'm going to actually, by the time we finish this presentation, you're going to be the top 1% of traders in the world. So here's a chart of we're right now in the longest bull market in history, which is actually just already finished. So I've predicted real estate markets. I bought real estate in which was the #1 top performing price appreciating city in Canada in the last 12 months. It's gone up 20% of price appreciation on the total value of those homes in that one city, while everyone else in the rest of the country is talking about losing or making 4% a year. So I know how to do research. I'm a statistics and numbers guy. I'm really good at uh, comparison and probability and statistics. So this is what has enabled me to call the end of the longest bull market in history successfully, as you'll see in the further presentation. But here is a chart of the stock market in the US. So I want to show you here, if you look at the bottom of the screen, you're actually going to have you see the years. So 2002, you saw the tech bubble crash right before that. We also saw the Great Recession crash in 2008, as well as where we were just a short while ago. So this is where I incorporated International Institute of Investing while I was doing seminars where these two arrows were. I was warning people publicly. I incorporated the company here, and then everything went down. So things started to pick up again. They crossed back over this blue 200-day moving average line. So I decided here to dissolve my business and not launch to warn people that we're going to have more from the road. So since then, I've been watching the markets and trading every single day, even. But for every year, I've been watching it rise, exceed where the level was prior to the Great Recession, and then some, and then even more, and then even some, until we hit today, or just a couple months ago, when I reincorporated in April the company name once again. That should scare a lot of people. There's a few people on this webinar right now who have known me for decades, have known me when I made the incorporation the first time, and are terrified of the fact that I'm now incorporated again this year. So I'm warning people. I want them to be careful, tread more carefully rather than thinking the trend is their friend. You know, there's a lot of misconceptions out there in the public, but keep this in mind. If you look how long this bull market is, it's a 10-year bull market. You have to keep in mind anybody that's been trading for less than 10 years or has been even a financial advisor for less than 10 years has never even lived through their career through a crash. So they may not be as qualified to give as much information as someone that's actually been trading through the stock bubble crash, through the Great Recession crash, and the one that I see about to happen around the corner. So this is a picture of what I think would happen next. This is probably the most accurate chart you're going to see in a while. Of course, it's not going to go straight down, but this is what I want you to keep in mind as a possibility, because no one usually even imagines that this can be happening. So let's continue on with a Bitcoin chart. So here I predicted back in a year ago, December, right here and here, I was warning people get out of Bitcoin. I saw the same patterns for a typical bubble forming. People were too celebrative that everything is fine. And I said, hold on, slow down, hold your horses. Something's not right here. Yes, I don't have a crystal ball. Price might go from Bitcoin from 20,000 back up to 40,000, but it's not worth the risk for the little bit amount that it could rise versus how much downside. Remember, you can make a lot of money in the markets, but if you're losing money, potentially 5 or 10 times more than what you stand to gain, that's not a good investment. It's not a good risk tolerance level. So back here, I predicted because of Bitcoin starting to have futures, that I think that it'll start trading more typically like other traditional markets. So I had an advantage. The edge I had over crypto traders was the fact that I've been watching traditional markets for 20 years and how they behave. now that Bitcoin was going to enter the traditional markets. So here I called the bottom in February on the day of the bottom. So the day of the peak and the day of the bottom, December 18th and February 5th, I actually called um, the peaks and bottoms because of specifically that one reason that they had futures now for Bitcoin. And there was a commodities futures trading here commission and Securities Exchange Commission CEOs had a hearing at the Banking Senate Committee in the United States on February 5th, where they talked about, yes, we need to regulate it more, but we're going to do it slowly. Then Bitcoin jumped up to over 10,000. I called, hold on a second. They said they're still going to regulate it. It might go back down. And then I did a couple more predictions accurately here, here, and here. So I didn't leave any of them out. Those are all the predictions I made. And then afterwards, this is an older chart. I made some more predictions. So far, my accuracy on Bitcoin has been actually more impressive than my traditional markets. But that was just from an edge from watching the markets, studying them as a hobby, as a passion of mine from a young age. And anything you do for 7 years or more, they say you'll become an expert at. So I've been watching for, like I said, almost 20 years I've been trading, 25 years I've been watching the markets. Here are some predictions I made to a group on Telegram and talking about, for one particular cryptocurrency, what I think would happen next. So I drew in not just the direction, but to the exact precise level where I believe the price would go up or down to, in this case, down. So I have target number one, target number two. And what ended up happening is this is the result. So this is what ended up happening for this particular Ethereum Classic coin. And you can see that it almost went exactly by what I drew. Let's now talk about, skip the 3 reasons why I called the peak for Bitcoin. Basically, profits were too big. People needed to cash in to spend their winnings. Futures trading began. That was the most important. And so what was on December 10th and December 18th, the new Bitcoin futures, they now instituted 50% of the Bitcoin price versus 100% of the Bitcoin price, where you used to have Bob and Sally just buy and sell from each other for 11,000, 12,000, 13,000, 14,000, 15,000, 16,000. That was represented by this blue ball here, where you could only make money when it was rising. But I said, hold on, I think now Bitcoin, that's only going to be resulting, half the price will result on based on that kind of mentality. The other half will be based on futures prices controlling the price of Bitcoin. And that's controlled by the banks over here in the red circle, having influence now on the price of Bitcoin. And you got to remember, banks have a lot of fiat currency because they can practically print unlimited amounts of paper money. And they now had a method by which to print money and inject that into the markets on either direction, so they could dampen prices. I was just saying that they missed the boat possibly and wanted to get back in cheaper so they could push the price back down to buy it at pennies on the dollar with their profits while shorting. And or the other reason could have been they just simply didn't want to become obsolete with this new technology and people starting to do commerce on the internet without banking. So, you have to be careful. There's always reasons and regulatory reasons why people are doing things. It's not as simple as it may sound when you can just put your money in, get out right away the next day for 100%. So let's move on here to, these are some of the articles I wrote about Bitcoin in particular. When it crossed over $1,000, I wrote this article in I believe January 5th, 2017. So I've been studying this for a while. The only thing interesting on this particular chart here is that I was comparing already back then the US dollar to the Chinese renminbi with Bitcoin price, and you can see how much in tandem they moved. So keep this in mind. I look at ratios. I study many charts and overlap many charts to give me an edge, because you can see the red circle, how one price is higher, then it goes lower, then it comes higher, and then it goes lower again. So if one goes too much up, it's a hint that it may be overpriced and it's a good opportunity to short or go for the other one. We'll get into what shorting means in a little while. So I haven't always been right. Now, I've made a lot of mistakes. In fact, I might even say I've made all of the mistakes. Literally everything you could possibly do wrong in the markets, I've done. Here's just one example. at the age of 21, I actually purchased this particular condominium, and you can see on it's a nice view, but the numbers here. Basically, I bought in a city which was probably the most overheated, overpriced, most expensive city in Canada, and because of that, as a result, you're not earning a lot of income. So if you have 1 or 2 months in a row where you have no income because the tenant moves out, and within a couple months you could easily fall into foreclosure. Now, this is exactly what happened to me. For this particular condo, I lost it to foreclosure. In the process, I ruined my credit. I lost all my money trying to keep it afloat because I made the mistake of stopping to trade to get into real estate. Now, I say a mistake, but in the end, I ended up learning a lot about real estate. And you can make money in stocks just as much as you can make money in real estate, just as much as you can make money in business. In all three, you can become a millionaire or multimillionaire, even a billionaire. You just have to learn and study and educate yourself. So what I ended up doing here, so after I lost this condominium, and remember, my credit is now zero, my track record doesn't look good, I don't have a long list of friends, I lost all my life savings trying to fix this situation. What ended up happening, I moved on and ended up purchasing a lot more real estate down the road. Just 3 years later, I actually managed to purchase a lot of properties in a single year. We will get into that in a second. So after doing this for almost 25 years, I've been watching like I say, the markets for a while. You have to get a mentor. If you don't have a mentor, you don't have anyone to take you by the hand and show you the shortcuts like I never had. It took me over 20 years to learn. I want to teach you so that you don't have to take that long amount of time to do it. But so what I'm saying is you should be investing by yourself, for yourself rather, but don't do it by yourself. Too many people rely on their financial advisor to manage their money for them. But the point is to start now. The earlier you get started, the earlier you start making mistakes, the sooner you'll accumulate more information and you'll start seeing better results. So don't try to do it yourself. You will make mistakes that are unnecessary that someone's already learned the hard way. Why should you have to lose all that money when you could instead prevent these mistakes and become confident in your decision-making abilities and actually have a better track record and performance and treat it more like a business. So in any business, what do? You do research first. Rather than doing research on your own, have someone like myself show you the shortcuts of what you should be researching, because a lot of my friends tell me they've read 20 books and all they ended up being is more confused. So I've discovered the hard way what you're not supposed to do, and I've basically made a long list of all of those mistakes, and I'm happy to share that with other people because I know success is first allowing as many other people as possible to become successful.
Hey, Robert, we actually have a video to share about how you were able to predict what was happening in the real estate industry. Do you mind if I go ahead and do that for you?
Sure.
Okay, just give me one moment. Okay, so this is a video of Robert actually making it on the news about his predictions in real estate.
Last number of years, in fact, since 2008, house prices in Windsor have been slipping, resulting in us being among the most affordable places in Canada in which to own a home, and that also makes the key climate for investment. As Rich Gardner shows us tonight, out-of-town investors are taking the bait, taking notice.
For years, buildings like this one have been sitting on the market.
There was always a lot of interested investors.
But with little faith in the city, investors were weary of purchasing big-ticket properties. But according to this real estate agent,
these investors are finally pulling the trigger.
Just who are they? Look no further than Robert Paddock.
I mean, you'd be smart as an investor to leave Vancouver and come to Windsor right now.
A few years ago, he did just that, moving from the most expensive part of Canada to the least expensive major city, Windsor. He's since bought up nearly 100 units.
As much as the numbers may be attractive, real estate may be attractive, but people really have to come to Windsor to appreciate what's available here.
Here's what they see in the numbers. A home listing report prepared by Coldwell Banker in 2012 looked at 74 markets across the country and pegged Windsor as the most affordable city to buy a family-sized, so-called dream home. In fact, Windsor is the only city where a desirable home can be purchased for less than $200,000, beating out the closest other city by more than 30 grand.
More and more people, the number crunchers on the calculators, they're all coming in flocks right now.
Paddock says the word is spreading throughout Toronto and Vancouver that the smart money is in Windsor.
One person coming over represents 10 of their friends that they're going to be telling all year long, hey, I bought a property in Windsor.
Real estate professionals say the biggest factor, Windsor is one of the last remaining cities in Canada where investors can get a 10% return on investment.
People are feeling confident about knowing that if they invest in Windsor, that they've got several years of good return.
And with more investors snatching up properties, real estate experts say the market will inevitably heat up and in time will drive up property values. Rich Garten, CTV News.
Phenomenal. So obviously Robert knows what he's doing when it comes to predicting what's happening on the marketplace.
Sam Evans here.
And I'm just going to bring it back to you, Robert. Go ahead and take over.
All right, so I have you here now. I'm back on my screen, and yeah, so that is interesting. I actually did that 3 years later after I had that foreclosure. So what ended up happening is, you lose everything. You can sit there and cry about it, but success is not having all the cars, having all the houses, having all the lifestyle you think you want. Success is getting back up when you get down. A lot of people think that, they look at the material results when everybody eventually hits the floor. It's all a matter of, are you going to stay down for the next 20 years, 30 years, 50 years, 100 years, or are you going to get yourself back up? And that's what I did within 2-3 years. I started buying properties again, even though I had ruined my credit score. And that first year is when I bought all of those units. So it was in a matter of 12 months, just over 12 months, that I bought 100 units. So the point is, I know about real estate. I know about picking markets. I know about research. I've done everything the hard way. Everything I learned was from doing, not from reading from a book. So the thing is, they don't teach money 101 in public education system as much as they should be. So there's a big void in the society about, what people should be doing to be building a sound foundation of financial literacy. And because of this lack, a lot of people are then forced into no other alternative but walk into their bank and blindly trust a stranger they've never met before, even sometimes, to give them their entire hard-earned life savings and trust their nest egg with, hoping that that person cares about their money more than they do, which you'll never be able to trust anyone, whether it's a banker or me, as much as you can trust yourself. So my philosophy is, since the age of 10, don't trust others. Learn on your own. I actually had a mutual fund for $500 at the age of 10. And I watched down this is a long time ago. I was writing down the price the old-fashioned way from the newspaper every day and seeing what happens. And it's not a lot of money, so you can't buy and sell because the fees from the bank would basically accumulate to be so much that by the end of the year you would have practically no money if you buy and sell, and you pay a fee every time. So I had to pick really strategically. I had one mutual fund and I kept it for 5 years. I managed to double. So by the time I was 10 to 15 years old, it went from $500 to $1,000. But that's not good enough. It's only 15% a year, and I calculated how much money I will have by the time I hit retirement age. And I didn't want to settle for less than a couple $100,000 because that's not enough to retire on. Even $1 million today is not enough to retire on. So I said, something else has to happen here. Plus, I don't want to wait that long. So, decades. So there's got to be a better way. There's got to be a faster way. And I started learning. I read literally every book, article, magazine, everything that crossed my path to do with investing, finance, or the economy. And, I picked up nuggets of information, how to make 10% a year, then how to make 20% a year. Then I learned something how to make 30% a year. Eventually, I managed to get into the triple digits. At that point, I decided, you know what? I'm going to go into my bank and fire my financial advisor. Are you ever tired of your broker making you broker? Because I decided to do what's called a self-directed trading account, where you direct where your money goes into, and you decide what you're buying and selling based on your due diligence and your decision making, not someone else. Remember, you can trust your own self more than any other stranger or other person. So fast forward, I walked in to fire my financial advisor. What did she say to me? Before I even opened my mouth, she didn't even know that I was there to fire her. She said, "You know what? You should be happy with 15% a year." I said, "Excuse me?" She's like, "Yeah, you could have lost 5% a year last year." And I said, the way that she said it was so calm, as if it's normal, standard policy for her to have people lose money and not care, that I was like, "Are you kidding me?" I fired her on the spot. I don't want to repeat what I said to her, but basically, I took back my cash. I said, "I'm going to do it on my own now." And I started trading at the age of 15 in actually buying and selling now in the markets in a self-directed account. So rather than worrying and having sleepless nights, not knowing, you bought something and you're not sure now what's going to happen, I've noticed a pattern. Every person that starts doing the exact same thing, where they now, okay, maybe they're tired of their financial advisor, they took back control of their own money, and now what? They're stuck. They have the same concerns. They can't sleep at night because they have the same inexperience. So this is why I've actually put together a report, the top 10 biggest mistakes investors make and how to avoid them. You'll get access to that in 24 hours after this webinar. But you want to, by the way, I have to stress, I'm not a financial advisor, and neither is Iulia. We're not licensed to give advice. We're just doing this merely for educational purposes only. So we're not certified, and we have to tell you by law that you need to seek the services of a certified financial advisor, and a professional will be able to help you make better decisions. We will not be held liable for any decisions you make based on this webinar. So just had to get that out of the way. And having said that, keep in mind that the average age of a financial advisor is 57 years old with gray hair, and they still have a JOB, which is just over broke, or just out of bankruptcy, in other words. So, be careful who you get advice from, but, make sure that they're licensed. The biggest challenges, is that they don't always have your best interest at heart. You cannot guarantee that. How do you not know that they're not just trying to meet a quota to raise as much capital as possible? Because at the end of the day, if they have more money under management, that's how they make a return. They charge a fee up front based on how much money they have under their control, and they charge you a management expense ratio, they call it, which is an MER fee of about 2% up front. So if you invest $100,000, they'll take $2,000 from you and only put $98,000 into your investments based on sideways performance for the next 3 decades. If they never made a dollar for you, they never lost a dollar for you, but every single year they take 2% of your fee from you, you'll end up losing half your money that way. Meanwhile, they're, eating caviar, going on exotic trips, driving in limos and helicopters with your cash, not even having an incentive to care about your performance of your portfolio. So you come in and talk to them, they'll probably tell you stuff like, "You know what, mutual fund C didn't perform very well last year. It lost 5%. Why don't you buy mutual fund B next time?" The problem with mutual funds is, bonds, mutual funds, RRSPs, the same things that they always tout as the number one thing to buy are the ones where you have the weakest chance of making any money. And it's either you versus the bank. You can't both be making money. So just be wary of who you're getting your advice from, what their compensation is, what their incentive is to maybe sell you a product where they get paid a higher commission than a different product that pays them a lower commission. But you, at the end of the day, are on the receiving end of lower performance and lower returns on your investment. So start trading on your own, start learning on your own how to do it, but tap into a network, a community of like-minded individuals that are positive and motivating you for success. And one of the things we're going to cover in our free report is how to have the account properly set up with your taxation in mind. We're also not tax accountants or lawyers. Keep that in mind. But, a lot of things I noticed every time someone opens up a trading account, almost, it seems like they don't keep a good regard about how much fees they're paying or how many transaction costs they have accumulating based on the upfront fee as well as what's called a spread fee. So you have to look at all the fees, all the tax consequences of an account before you open the account, not just necessarily blindly opening a trading account, especially with the banks, which are abusing the trust of everyone going to them because, again, schools forgot to teach. So don't repeat the same rookie mistakes that I did. I've already done them. Why should you? I would much rather that you learn from my mistakes and save your money. We are now talking about, you don't see the warning signs, you expose yourself and your hard-earned money to unnecessary risk that could lead you to entire portfolio being wiped out. I've done that. I've wiped out my entire portfolio several times, actually. And if you look at the average expert investor, he's actually had on 3.5 times had to wipe out all of his money before he learned how to not do that. I'm trying to avoid that situation for you so it never even happens the first time. The only way you're going to do that is by having a mentor, having you someone hold you by the hand and teach you the shortcuts. I want to navigate the jungle for you to avoid the dangers. And keep in mind, if you're going to just open a self-directed trading account and jump in the water, you're swimming with sharks. There have been professional traders trying to get your money from you, working for the banks. That's why 95% of people lose money in the markets, because they don't know simply what they're doing. Now, keep in mind, it's not difficult to learn. You just have to start learning slowly and steadily. And as a little bit of time goes by, you'll be the more expert than even the banks. In 2017, 95% of hedge fund managers couldn't even outperform the basic index, the S&P 500. So a blind monkey throwing darts at a wall with a newspaper to pick stocks would have had a better performance than had you trusted and paid someone else to manage your money for you. So if you're feeling stuck, I completely understand. And it's not your fault. It's the way the school system and the TV and everything is linked together. They don't have this education. But that's why I said, you know what, and Robert, enough is enough. You need to help these people. I want to end unnecessarily struggles that I see people every day to day paying their bills, even relationships being in trouble because of over money. So, what we want to do now is get into some of the solutions. So if you want the easy way to generate higher returns, get lower exposure to risk, and stay on top of the markets without having to watch them 24/7, because keep in mind, you only need to trade 5, 10, 20 minutes a day. You don't have to be glued to the markets 24/7. Some people do that, but it's not necessary. And you'll see why in a moment. You don't need to trade 24/7. You only need, some of my friends trade 5 minutes a day. They check up on what's happened. They get an update from me, what's going on. They make a decision. They place their trades. They place their backup trades, and they go back to sleep. And while they're sleeping, the computer is automatically working for them. They've set their targets. They're not emotional. They can sleep peacefully at night. So in the past 6 months, I've personally had days where I've actually made 100% return. Those particular trades were even done buying both directions. So I didn't care if the market moved up or down. This is something we're going to cover in the following slides. And I've also grown entire portfolios by 50%, even though we didn't touch the entire account balance. We traded with only 25% of the cash in the account to make the whole account grow by 50%. So not only are anyone can go gambling and risk all their money or lose all their money, but how nice would it sound if you can actually double your money, but if you're wrong, only lose 10% of your money? So we talked already about, past performance is not an indicator of future results. Talk to a financial advisor. These results are not typical, and, don't expect this to happen for everybody, but you can expect if you learn more, your results will get better. So before we go any further, I want to help you decide, is it even worth your time? Because I can make you the promise that every single minute you spend with me will come back to you tenfold. And you'll see after that every minute you spent was more than paying for itself. every time. I'm going to jam pack as much content as I can fit into this presentation for you. But if you're comfortable with your job, if you're comfortable driving through traffic, if you're comfortable with the rat race, if you think that your job is stable and you're going to still have it in 10, 20 years, then you don't need to watch this seminar. You can go back to your work, hope that you have a pension when you go to collect it, and don't learn how to make your money work hard for you rather than you working hard for money. Let's get straight into what are the 3 secrets that I'm going to share with you right now to make sure that by the time we're finished, you're going to be in the top 1% of day traders or even investors in the world that's on the entire planet. Because most people, like I said, don't know these 3 basic things. And we're going to dive deeper into these 3 things.
One second, Rob.
Yeah.
Hey guys, if you're getting a lot of value right now, I just want you to drop a comment down below. Have you been getting a lot of value? Are you excited to know the 3 secrets that you need to know to put you in the top 1% of all traders? If you're excited for that right now, give Rob some love, give Rob some feedback, because he doesn't have to do this. He's volunteering his time here, and I just want to show some love and appreciation. So go ahead and drop a comment down below and let us know. Do you want to know the 3 secrets? So go ahead and do that. And Rob, go ahead and take it away.
All right, thank you for that. So basically, these are going to sound so simple because they are simple. You know, it doesn't have to be complicated. Banks, financial advisors, they make the industry sound complicated so that when you walk in, you get confused and then blindly hand over your money to let someone else manage it for you. But these are very simple. Starting with the first one, you have to learn how to have the proper mindset. Okay, we're going to talk about several key aspects of this, as well as several detailed examples and subcategories of lessons for the next 2 secrets, which are, in order to be the best trader in the world, you have to learn how to avoid losses. Warren Buffett said, you have to, better than missing out on an opportunity than to experience a loss. Because think about this, if you have, say, $100,000 and you lose 50% of your money, how much do you think you have to make to get back to where you were started off from with $100,000? You lose 50,000 by losing 50%, but now to go back from 50,000 to 100,000, you have to make 100% return. So we're going to show you a bunch of ways how to avoid your losses, secrets that, you know, some of those secrets alone will guarantee you that you're in the top 1% of traders in the world. Can you guess what the 3rd secret is? If I'm talking about having the proper mindset, lowering your risk to the downside, the 3rd secret is very simply maximize your gains and give it as much time as possible for them to grow. We're going to give you secrets of how to do 10, 20, 100 years worth of returns in 1 fraction or 1/100th of the amount of time that typically you may be used to doing. So we're going to speed things up, be more efficient, and I'm going to give you exact strategies and techniques and systems that I use and implement constantly to get consistent results. And so let's get into the first one. Secret number 1, you have to have the proper mindset. Going back to the school system, if you are sitting in front of your classroom on the whiteboard or blackboard and you have to fill out an answer for a question you've never seen before, they haven't even taught you yet, but all your friends are behind you laughing because you don't know the answer, what do you learn? You learn how to not make mistakes. The first mistake is thinking that you'll never make a mistake. Everybody, including myself, including Warren Buffett, every trader eventually makes a mistake. That one mistake alone has wiped out entire portfolios. People bought something, they crossed their fingers, they hoped that it would go up, and guess what happened? They lost all their money. And guess what? Then they couldn't even make 100% return to get back their money. They had to make 1,000% return to get back their money, which was impossible for them to do. So rather than have that mindset going in thinking, I'm never going to make a mistake, I'm never going to make a mistake, you should think, when I make a mistake trading, did I have a good balance of how much I could lose versus how much I could gain on that one particular trade? When you have that kind of balance in mind, you now can adjust. If you lose $1 for every $10 that you gain, you could literally lose 9 trades in a row, be wrong, be wrong, be wrong, be wrong, be wrong, be wrong. But on the 10th trade, if you're right, you can make back more profit than all of your losses combined So you can actually be a profitable trader only being correct 10% of the time. But that's only if you have the proper mindset and portfolio management strategy. So one of the other ways to realize is people like to overtrade. Another mindset that you have to have is I only trade when 3% of the time. Why? Because I trade when it's the best 3% of the day. I don't trade 24/7. You have to sleep. So why don't I look when maybe the New York market is open at the same time as the London market is open? They actually do overlap for a few hours. So in the morning, depending where you're watching from around the world, it should be morning or nighttime right now. But just know markets are open 24/7, 6 days a week. Some of markets are closed, but some of them are open 24/7. So being on the sidelines is also considered a trade. There's been days where people ask me, "Hey, Rob, did you trade today?" I said, "Yes." For me, the definition of trading is watching markets and having a chance to identify opportunities if they present themselves. If there's no opportunity, but I watched the markets, I still was trading that day, because being on the sidelines is a position when everybody else lost money that day and you didn't. So keep in mind, you don't have to buy and sell 800 times a day. I have done that too, but it's not necessary. There's a lot of different strategies. That's some stuff we do cover. Stuff we mentioned already. So basically, here's some time frames. Okay, these quick squiggly lines I drew in here show a long-term chart, a medium-term chart, and a short-term chart, which moves more rapidly. What I'm trying to say is another mindset is don't get stuck on just one time frame. Look at multiple time frames. Look at when is the best, time to trade based on the long-term chart. We can eliminate this whole area right here. Okay, so now that we've eliminated more than half the time of the day that we're not going to bother trading on that particular product because it's a waste of time, because this long-term indicator doesn't look very strong. In fact, it looks bearish. We look at the remaining time period. Now, let's cut that down even further. Let's look at the medium term. Out of the remaining time that we do want to trade, which part doesn't look good? Well, there's another portion we can cut out right there. So if you look what's left, we have now only 25% of the day that we actually are interested today to trade for this particular asset, whether it's a stock, option, commodity, futures, currency, cryptocurrency. They all have long-term, medium-term, and short-term indicators and many kinds of different indicators. We teach all of them. This is just a random example of a random asset with a random indicator that is the same indicator and is showing on different time frames. So now that we've picked the best 25% of the day, let's try to narrow that down even further, looking at the short-term chart and eliminating the worst time of day that we don't want to touch that chart. So in the end, we managed to narrow down this green bars are where we want to trade. This is very simple to do. If you've ever been on a roller coaster, you know exactly what I'm talking about. It's not 100% accurate, but it's about 80% accuracy you can get just by following these sort of roller coaster type indicators and picking out when you have the best chance. Don't trade all the time. Don't trade half the time. Trade when you have the best chance of getting success. So another thing people can do to have the right mindset is don't put all your eggs in one basket. You hear that a lot, and people say diversify, but I'm not a believer of that. I believe that that's something that the financial industry made up because, again, they just care about taking your 2% fee up front, and they say invest in a scattered amount of industries or stocks so that no matter what happens, you make money or lose money, but they get their 2% fee every year again and again and again. And this is why the industry norm has been formed over many generations to become just invest for the long term. What do you do though when you're wrong? So rather than buying with all of your money in your entire account on any particular, even if it is a mutual fund or one particular stock, for example, what happens is if you're wrong, all of your money is wrong. Wouldn't it be a better strategy to put a small portion of your capital that you have available to trade? And remember, you should always trade with only what you're comfortable losing. if you trade with a starting balance that's only a fraction of your entire balance, you can afford to make more mistakes this way. So here's what I'm talking about. Here's a hypothetical example. It can be a stock, a crypto, or any kind of asset, but let's call it that the price is $1.10 when you bought it. And remember, we want it to go up. So we're in the long position and we want the price to rise. But what does it do? It goes from $1.10 down to $1.09. You actually lose money. But because you didn't put all of your money on that trade, you only put maybe say 10% of your money, and you put every month another 10% of your money to purchase more, regardless of what the price is doing. In 10 months, you've been purchasing. In this particular example, I've put 25% of all my portfolio at the beginning. I was wrong. The price dropped to $1.09. At that month, I would put in another 25% of my portfolio. What happens? I'm still hoping it goes up, because if it does, my first investment will be back to break even, but my second one will be profitable. What ended up happening? Shoot, I was wrong. The price kept dropping further down to $1.08. So on the next month, I put another 25% of my portfolio into purchasing at that cheaper price of $1.08. Guess what happens? It drops even more. So someone that put in all their money at the beginning has been devastated now and becoming losing a lot of money. At $1.07, we still have 25% of our portfolio available to purchase. So what we do, we take our whole 25% of our portfolio, we purchase at $1.07, and finally, eventually, with the markets liking to revert back to their mean, what I would say is watch it rise back up, and you combine this loss with this gain, and overall, if you look at the purple arrow, the price has gone down, but if you add them all up, you're actually profitable. So dollar cost averaging is another mindset technique that you can use. I'm going to fast forward here because I have a lot of more content I want to share with you. So look at risk reward ratios. Personally, I like the 4-to-1 risk reward ratio, meaning for every dollar that I lose, I have a potential to make $4 of profit. This is what it looks like. Okay. Here on this chart, you can just see from the purple line that we can go down either $1 or up $9 based on a psychological resistance and a psychological support level. This particular example is showing gold prices. Always have more to stand to gain than you can lose. How do you do that? So here we have support levels. I can look at any chart with my naked eye and see support and resistance levels, but I'm going to show you how to do that right now. Based on this chart, okay, this is a gold chart back in 2015. So what we have here is I'm going to try to, can you see any kind of channels of resistance and support? What I mean by channel is something like this. You have a resistance where there's a pressure at the top where the price has a barrier and it's difficult to exceed. And there's also a barrier on the downside, which is a support, the green line, which has pressure to keep the price higher. Do you see any more channels on this chart? Now, keep in mind, they don't have to be parallel. They can be slanted upwards. They could also be slanted downwards. Do you see any other channels on this particular chart? Because I do. I see a much larger one, and that's a hint. There's one up here and here. So what I typically like to do is draw a middle line to help see if I've identified a good channel. And in this case, yes, the middle line even has some significance. I call that the magnetic line or the magic line. The price likes to touch that line more often. If you look at the yellow line, the price touched it 1, 2, 3, 4, 5, 6, 7 times, but the top red line only got touched 3 times and the bottom green line twice. So the point is the price usually will come back to the middle. And because of that, I like to draw middle lines of middle lines. This is what you're seeing here and here. So it gives me an indication on its way to going back towards the middle, where are some areas of resistance and support? Once you identify resistance and support levels, this is something that a lot of traders already don't do. This is a huge hint of where we might have prices turning back up or back down. If you remember at the beginning, all we saw was a blind chart, which is harder to predict. But with these lines, it's much now easier to predict where the price is going next. So one more thing that I should mention is this is why most people gamble in the markets. Gambling means you just don't know what you're doing. It doesn't mean that markets are gambling. It means that successful traders that spend the time to educate themselves, know what they're doing, can actually have a winning track record. But let's take this example. Say Bob buys here on this yellow line, and he wants the stock to go up, but it can go up just as much as it can go down. It has a 50-50 chance, and it has a 1-to-1 risk-reward ratio. That is not a good technique to trade. What I would do instead is buy up here. Not buy, rather short. So you can make money when the markets go up, down, or sideways. In this particular case, I want to short the markets. I want it to go down. So I will lose money if it rises, and I will make money if the markets go down. How much will I lose? I will lose $1, or I can gain $1, $2, $3 just to get back to the middle line, which remember we call it the magic line. So wait till you're closer to the resistance or closer to the support before you actually enter a trade. Don't just enter at any random time period when you have a 50-50 chance. Moving on. So we have now the secret number 2, how to limit or avoid losses. I'm going to give you some pretty powerful information right this second, okay? On the very next slide. We're going to talk about what I saw, which led me to, out of my pocket, pay for hotel rooms and warn people back in 2006 and 2007 about the greatest depression that I saw coming, which never materialized. They had just a recession. They managed to avert a depression back then. But today, I see the same signs appearing again. And here's what they are. Oh, this is a chart of the S&P 500. And if you look where we're at right now, all I'm looking at, because there's a lot of lines here, is here. Look at the purple, blue, and yellow lines. This is called a moving average. So we have a 50-day, a 100-day, and a 200-day moving average. The yellow line, the 50-day moving average, you can see that it has crossed below the blue line, which is the 200-day moving average. This is called a death cross. And just as the name inhibits, that is very bad for the markets. A lot of technical traders, a lot of stockbrokers even use that. And you can see every time that this happens is a really big bearish sign for the markets. And you can see that's also why we followed that with a big loss. Just, in the last year alone, we've had $500 billion wiped out from the world's richest alone had wiped out 500 billion. Yeah, sure, they only have 4.7 trillion now, the top 500 richest people. But, why lose money when you can easily see a death cross with the 50-day, the yellow line crossing below the blue line, the 200-day moving average? It's now dragging down the purple line, which is the 100-day moving average, which is now falling and getting closer also to the 200-day moving average. And that purple line might even create a death cross pretty soon. So that's a bad sign for markets. This is something that tells me that we're not going to maintain a bull market, the longest one in history. Another sign, okay, we just had a yield curve spread invert, meaning if you look at the 2-year versus the 10-year spread for bonds, every time they hit negative, which is you see on the chart 0.00, that preceded a recession. These bars that are shaded are recessions. Every time the 10 2-year treasury yield spread filed negative territory, it preceded a recession. Here, 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 and here. Back in before the 2008. That is one of the reasons why I called the recession before everyone else. Unfortunately, people lost their entire life savings during that time. The bad thing is we're nearing that area right now again. So, I've been waiting for 10 years to tell people get out of the markets, and I've done that this year, and that should scare a lot of people. Here's a closer look at that. So we're at 2018. We're pretty much at zero now. You might as well just run for the hills. Another reason is China's 1 in 10 sovereign bond spread. Only twice has it been negative, and 2013 and 2017. So this is meaning China is no longer going to be helping our situation for the global economy, which has typically seen pretty impressive growth, 6-7% a year versus everyone else. They were kind of the stability of the world. Even they're struggling now. This is not adding up to look like anything other than a perfect storm, in my opinion. There's more. There's other reasons I'm seeing. Okay, we have what is called stock buybacks. So you may have heard about this. Companies buying back their own shares. They take their own money or sometimes borrowed money that they're paying interest on just to purchase their own shares on the open stock market. What does that do? It artificially appreciates their own stock prices. That's why we've had the longest bull market in history. But it also doesn't produce any kind of tangible impact on the economy. It's not money that could have gone into marketing, market research, research and development, new products. Instead of growing new things to sell, they're just buying their own shares, which are the same thing they were yesterday. And guess what? All that does is it gives them more exposure when the markets do go back down, that they'll be holding on to two buckets, not one bucket of their own share price. So what will that do to their revenues and earnings? When the markets start going back down, I'm saying it's going to be more amplified. Over here, you're looking at $650 billion for 2018. It actually already exceeded 1.1 trillion. So you have 1.1 trillion announced. Already 800 billion have been purchased. So that leaves another potentially $300 billion of stock to buy. And several companies have announced plans to buy more even now. But I don't think that that's a wise move for them. And I think that, that only means that they're more at risk of falling. So their exposure is increased too much. And I would caution people that if you think the markets or economies are good, it's only because the companies bought their own shares. And these companies are usually the biggest ones. So I would stay away from the big companies. They have the hardest to fall. I'm never a fan of buying $1 trillion market cap company. What are you hoping for it to go to 2 trillion? It's not easy. I would much rather invest in a startup that has 100x or 200x potential to grow and is growing at a much faster rate with better profit margins. One of the reasons why I decided to start my own company too. So another reason why I saw, we're in big trouble right now. This is actually during the recession, and it's even worse today. The total credit market debt as a percentage of GDP has exceeded the Great Depression, even the peak of the Great Depression. So now people think I'm nuts, but eventually they're going to start thinking, wait a minute, maybe there is potential for, a Venezuela-like crisis where there's no food in the grocery stores. People are even finished eating their pets because they simply don't have food and toilet paper anymore. And it can get that dire because it's happening now. It's happened in recent history, and it can happen again. So keep in mind, debt levels are skyrocketing, just like they did before the recession. And if you look at on an individual basis, how much money people owe, that would be the blue line, and the scale on the right. It's over 130% is person's household debt compared to GDP. And on the left side, you have their savings rate, which is nearing zero. Okay. In some countries, it's actually negative already savings rate, where people are borrowing more money than they make, and they're spending all of it. So when they're spending, let's take a look at consumer confidence. If people are confident in the economy, even if it's false reassuring that the economy is going to go up, we've reached a peak. People are so confident in the economy, they're spending, they're buying, they're killing each other just to get a TV on Black Friday. But then guess what? It's starting to go back down. I see this as a bearish sign more than ever, because if people start spending less money, the stores start selling less TVs, the stores start having less profit, the shareholders of those companies that are selling those TVs are making less profit, everyone is making less profit. It's a negative spiraling effect that is not it's not a good situation. So the fact that we are so high, it only means to me that we have more room to fall in terms of consumer confidence. If everyone is too happy, it doesn't take much for something to happen where everyone panics at the same time, and we have a long way down, and it is already pointing down. This is a very bad sign. Why I'm predicting we have a recession or depression even around the corner. So what we have here is the US dollar. So actually this dollar, the reason why consumers are confident, the dollar is soaring, the dollar is strong, everyone is happy for now. But keep in mind, the US stock markets, it's not just Americans that are buying on shares on the US markets. There's a lot more money around the whole world that are thinking of buying US stocks or not buying US stocks. For someone in Saudi Arabia, someone in China, someone in India that is thinking, should I buy US equities today? They look at how much the conversion rate is for the US dollar. If the dollar is too strong, when they convert their money into US dollars in order to buy US stocks, they're going to get less shares. So there's less demand for US stocks when the dollar is rising. Now, this is going to lead into my next problem that I see happening. By the way, I do look on this chart and I see that the US dollar might fall a little bit, which is also another sign that the US in general might fall. But that's not what I'm talking about now. What I'm talking about is the reason why the dollar is so strong is when the Federal Reserve raises interest rates. Now, this chart is very important. You can see back before the recession in 2006 and 7, when I was doing seminars warning people that I see a problem in the markets. Back then, the Federal Reserve had this tool in their toolbox. They could have actually lowered interest rates to try to prop up artificially the markets. Markets were so bad shape that they actually dropped interest rates almost to zero. Since then, they needed to keep them at zero because otherwise I saw that there would be weakness in the markets. Well, guess what? The fact that they've been raising rates several times, talking as if there's no problem because the economy is so strong, they're misleading people thinking with all these economic indicators that they've never been better, and people believe that they justify raising interest rates when I think this is shooting themselves in the foot. And Trump will agree with me because he's been actually calling them out, even warning about firing Powell for raising interest rates. So this, to me, all you got to take from this is that this is the final nail in the coffin. They cannot raise interest rates, which will raise the dollar, which will hurt the stock markets because they are not in the best shape ever. In fact, the US has never had this much debt before, and they've never been this fragile before. So as they raise rates now, even if they don't raise any more in 2019, they just killed themselves in December by raising rates. So US is not the only one that is printing money. For the last few years, the European Central Bank has been actually buying back bonds from companies, even corporate bonds. And this stimulus, they just announced in December 2018 that they're going to cut it off. This is not a good sign. When you had QE1, QE2, QE3, this was quantitative easing, basically money printing. All that printed money goes into the stock market to push it higher. When they stop printing money, the party's over and the music stops and stocks fall. So they've just announced in December that the European Central Bank will stop buying bonds of companies, in addition to the US raising interest rates. While we're on Europe bonds, we can look at Italian banks here. They're actually struggling the most. That alone is another reason why I'm calling for a recession or worse in Europe, because their debt levels are way too high. They have non-performing loans that are really high now. And if you look at it, Italy, it's not like the other countries, the pigs, Spain, Italy, Greece. Portugal was small enough to bail out, but Italy, their banks are so huge, it's not so easy to bail them out. And if you look on this chart, the main thing I want you to take away, why I see a recession coming, is the fact that so many different countries have so many different levels of non-performing loans, and also different retirement ages, how many hours a week they work. And when you have so many differences in so many different countries that are trying to use the same euro currency, you have a problem. A lot of countries are now getting popular, their political movements where they're trying to leave the European Union altogether. This is a crumbling infrastructure. Even you have now Brexit happening, and this is a big mess that's just around the corner. This is going to negatively impact markets in the first and second quarter of 2019, just to add fuel to the fire. On top of the biggest debt we have in the US and even around the world, we've already exceeded $184 trillion of debt. When this debt bubble bursts, there's going to be a lot of mayhem in the streets. Oh, speaking of which, we already have that. You may have heard or may not have heard, because they're not mentioning this so much, but in France, there was a stand up against some tax, and they call it a yellow vest or yellow jacket movement. This has started to spread. This is already happening. This has happened already last week. Other countries are jumping in, buying vests. And this is not looking to be contributing positively to the global economy if you have this start happening. And I predict this will happen now and spread to every country that is a major economy that has a ripple effect. Because remember, 10 years ago, we didn't have so much communication online with social media. News travels faster now. So there's a chance that this could have a big, massive impact on the world economy, especially since just trying to find these pictures. I had a tough time to find pictures. They're really trying hard to take these pictures off the internet. And I think they're going to have nothing they can do about it. I've even seen sometimes police join forces with the people and take off their helmets and stand in unison. So this is something to keep in mind. You have to watch politics. You have to watch geopolitical events. I'm not boring you with stuff I saw back in 2007. These are things that are happening now. So the last thing we'll cover for now about what I see another reason why the recession is coming is because we have here volatility index. All this means is how stable. It's called the so-called fear gauge, meaning if it's low, markets are relatively calm. Well, you'll see recently that it spiked. That's why just yesterday we had the biggest one-day jump in U.S. equities since 2009 because this reached over 30. When for the rest of the year, it basically sat around just over 10 to 11 to 12 in that region. When this spikes, that means you can have bigger movements to the upside and bigger movements to the downside. So this is not a good thing for markets, in my opinion, because when you have all this mayhem and perfect storm forming with so many of the reasons we covered, the fact that now the market is able to move with more wild swings in either direction, the direction will probably be to the downside and it'll be a bigger move. So this is already happening. This is why I made predictions saying even before I was going to do this next year, but I said, no, I have to start now in October telling people how to avoid losses. So I'm going to only touch briefly on a couple more ways to avoid losses rather than just paying attention to current events, knowing about what.
Just wanted to ask you guys, are you convinced now that there are some serious warning signs on the marketplace? Do you now see why we urgently had to do this webinar? So if you're here right now, I know we're giving you guys a lot of value, but we're about to dive in deep into specific strategies so that you can actually prosper in this up and coming economic crash. So do stick to the very end because we have a very special bonus for you. We're going to show you how to avoid the top investing mistakes. So let me know, are you getting value? Drop a comment down below and we'll continue.
All right, so we have here what is called a stop loss. This is one of the ways that we're going to limit our losses. So remember, the secret number 2 is don't lose money. The best way to do that is if you start losing money, to get out quickly. You can do this while you're sleeping. As soon as you buy something, if you want it to go up, within 10 seconds, you place a second trade saying that if it drops a certain amount, it could be as small as 1% loss, it'll automatically sell it for you, even while you're asleep. I recommend that you always use stop losses. Now, this one secret alone of this subcategory of the secret is the fact that you will be able to be the top 1% of traders because most people don't use stop losses or even know what they are. I personally lost 5 figures in high school just from this one lesson, not knowing what a stop loss is when I was trading during the tech bubble crash. So make sure you always use stop losses. Combine that with support channels. You can see here where I would do a channel, the red and green line, you can just put the stop loss right below there. So if it doesn't stay, which has a bigger probability of staying within the channel, if it falls out of that channel, you automatically sell it right away. You don't ride the wave all the way down. Now, I got to stress for our advanced listeners, yes, there are some things as bull and bear traps, which is kind of like it pretends to fall out of the channel and then quickly goes back in just to make the stop losses trigger. But we cover that in our more advanced lessons. The basics I want to cover right now, and that is basically always use stop losses. There are different types of stop losses. There's even fancier stop losses that will move, again, while you're sleeping. It'll follow the price of whatever you're buying or selling automatically so that it'll self-adjust and move up and down without you having to touch it. This is just, this chart is just an example of a trade I placed. This is a long time ago, like 10 years ago even. And you can see the stop loss is just the black line. I kept moving up like a staircase. So all that does is it locks in your profit. As soon as you buy, if the price spikes up, if it falls back down, it'll sell it at your break even. But if you keep moving it up, you cannot get lower price than that. If there's no like catastrophe in the world where markets are closed and you can't even trigger your stop losses, or when they do open again, they trigger at the best available price. But in general, all you need to know, move up your stop losses to lock in your profits, and then you don't care what happens. In this particular case, this is sort of a technique I like using sometimes. It's called scalping, where you buy and sell, buy and sell, buy and sell, buy and sell 4 or 5 times in one day. You can see at the bottom of the chart, these are hours of the day. So it's within a single day, you can make such a movement of 5, even 10%, and repeatedly do that all day long just by drawing a channel and hoping that it repeats. And if you're wrong, make sure you have a stop loss. So one of the main things that you can do to avoid losses, and this also now leads also into the next segment, which is how to make as much profit as possible, is look for divergences, because that's eventually going to converge. What I mean by that is, if you look on this chart, the indicator had a downward trend while the price on the top of the chart had an upward trend simultaneously. This is called a divergence. They're supposed to move in the same direction most, if not all of the time. When they don't, because markets are not perfect, those are opportunities. So you can see here, when the indicator was dropping and there was no sign of it going back up, but I saw the price go up, I actually sold at this peak, meaning I shorted. I wanted the price to go down to profit. And what happened? I kept watching. Now, after you enter a trade, you don't just walk away. It's good to keep an eye on it. Keep an eye on the indicator. Make sure that you see here it says 3 failed attempts. It did not go back up. The indicator did not rise. So what happened? I just draw a trend line on the indicator, meaning it's a slope downwards, and I make a parallel slope downwards on the price. And you can see that that is exactly where my target hit. The price dropped back down to where it should be when there is no divergence. Those opportunities are enough to get you 1 to 10% return a day if you find them every day. And it's easy to do. Here's another example. The purple line is where the price is gone. But if you look at the indicators and I draw a blue trend line on the indicator where it should move, I repeat that exact same trend line on the actual chart of the price, and that gives me a target for where the price will move. The ensuing result of that trade, you can see here, is the price moved even lower and eventually hit the trend line. That was quite a significant drop. I think it went from about 155 down to 137. So that gives you an idea for the return that we made on that particular trade. Always look for patterns. People are patterns. The markets are patterns. There's statistics and probabilities that will let you find different shapes, different patterns. We don't have time to cover them all right now. Maybe what I will do is cover one of them. So here's a head and shoulders indicator. As you can see from this stranger over here, this is actually a head and shoulders on a person. And here is a without the person, and here's an upside down one. This is a pattern. We're going to look on a particular chart, which is cryptocurrency, how often this pattern can repeat. You can go straight from a head and shoulders to an upside down head and shoulders, straight into a head and shoulders, straight into an upside down head and shoulders. And here's some more examples. See if you can identify yourself now that you know what to look for. Do you see this pattern anywhere? I see several. What you do, you draw a neckline, which is this red line. And if it breaks below that red line again, then you have a confirmed head and shoulders. Not until it drops past that red line again can you say that there's a head and shoulders pattern. But I like to warn people in advance and say there may be one forming soon. And if it does form, how much will it go down? Usually by the size of the head. So I just drew an upside down triangle. Keep in mind, you want to be careful if people have not been trading for a while, but they pass themselves off to be an expert. You always have to ask everyone, if you're looking at their charts, how long have they been trading? Because you don't know. And if you're following someone that has no experience, you're in for a surprise. You're going to have some struggles. Here's some examples. Okay, this is not my chart now. This is somebody else's chart. They drew onto their chart what's called a buy zone, which is their target to enter the market. However, you now, after just 1 minute, have learned from me what is a head and shoulders pattern, which we see here. There is a head and shoulders pattern here. And actually at that buy zone is where we confirm that there is a head and shoulders, which is confirmation that it's going to go back down. Whereas this person's touting that they should be buying. They're giving you the opposite advice than what you should be taking. So skip some of these tips. I do cover this more. We're going to do more presentations. We're going to have more information. We're going to have more slides. We're going to have more webinars. We're going to have more lives. We're going to have more online courses. We're going to be sharing all the things I've learned over a couple of decades. I can't possibly fit that in this short presentation. But what I can tell you is this story. Okay, this is a friend of, or not even a friend, but basically, when I was living in Vancouver, in that sub penthouse that we went into foreclosure with, I actually crossed the street to a presentation center for a new high-rise that was being constructed, literally across the street from mine. And I wanted to get a gauge for how much is my condo worth. So I want to go see how much the brand new ones are selling for. Now, as soon as I walked into the presentation center, which was for a high-rise that's 15 stories, I was on the 27th floor, but I knew I could still get a gauge for how the prices are. They said, sorry, we're sold out. I said, oh, that's a shame, because I just wanted the prices. They said, but we do have the penthouse still available. So I played along and I pretended like I'm here to buy the penthouse and say, okay, how much is it worth? A couple $1 million, whatever. Then they asked me, well, what's your job? And I said, I'm a trader. And the salesman who was selling that condo said, oh, I day trade too. And, which one are you buying right now? And, I have all my money in one stock. And he kept going. I said, hold on a second. You have all your money in one stock? Now, remember, I know that 95% people lose money in the markets. So there's a 95% chance that he doesn't know what he's doing compared to my experience watching the markets. I said, you know what? Why don't you come over to my apartment? I did tell him that I owned a sub penthouse across the street. And I told him this. He literally came over and I said, hold your breath. By the time you hold your breath, I will tell you what your stock is going to do next. And he literally did hold his breath. And that's when I drew this chart here with the red and green line. And you are now familiar with what is a trade channel. And what do you think I told him at this red circle, which is the day that we did this drawing? It obviously hit that level 3, 4, 5 times. We had a green level of support. I told him, I don't think this stock is going higher. In fact, I think it's a good investment with a good risk reward ratio to the downside. opposite of what he had parked $200,000 of his entire portfolio into one stock, which was actually an oil company. If you look on the second picture, you can actually see here on the top, I have the price of oil, which was at the time hitting $147, and then it crashed down to $35. At the same time, this stock dropped from $4.30. The next day it went higher. So he called me and said, "You see, I was right. I'm going to wait till this thing doubles, and then I'll start trading commodity futures." But that was the last day that stock rose from that level. And next day it came back down, and it actually went from $4.30 to below $1. So he lost 75% of his money. It went from 200,000 down to 46,500 approximately. And the point of this story is he could have averted this very easily, because this is what I had actually suggested to him as a possibility that he could do. Instead of keeping $200,000 in the stock, he could keep just $180,000 in the stock. So if he was still of the belief of the stance that the stock will double in value, 180,000 will still double to 360,000. That's still a good, decent return. But with the other 20,000, I suggested, here's one technique you could do. You could actually buy oil futures to hedge his position, meaning hedge is go in the opposite direction. So if the stock price goes up because oil prices go up, he'll make 180 turn into 360. But what if oil prices crash like they did? He would actually be making $1,000 for every dollar that oil prices went down. And that's just on a single contract of oil commodities, which at the time he could have afforded buying 3 of them with $20,000. So again, to reiterate, if the price of oil dropped $100, which it did, he would have made $100,000 per contract, and he could have afforded to buy 3 contracts. He could have made $300,000 profit on that $20,000 commodity. So he would have $320,000 plus the $40,000 that he had left in his account. He would be about $360,000 regardless of if the price went up or down. But he didn't hedge. He didn't listen to me, and I tried to get a hold of him afterwards to try to help him turn his $50,000 back up to $200,000, but he never replied back to me. So I hope he's back to where he started by now. This was a long time ago, but this is just a lesson to show you when people don't take my advice or don't listen to me or ignore my research, it's potentially very, very costly, especially when I show techniques where you can limit your risk, not just make more money, but avoid unnecessary stupid losses like this gentleman, which will remain unnamed. So now that you're sort of getting a hint of how to avoid losses, do you want to know how to make money, actually gain and prosper from, regardless of if the market's going up or down? I'm going to show you how to maximize your returns. I'm going to do that really quickly and give you some suggestions. So we're not going to go into the lesson of what are commodity futures and how they work, but just be aware of the fact that there are products out there that you may not even have heard of if your financial advisor only tells you to buy bonds, mutual funds, and RRSPs. Some products have more leverage, more potential to make more money, and you want to study these things. We are going to be covering these. We're going to be teaching exactly step by step how to do commodity futures. We're also going to talk about how to maximize your gains with this. Usually you can get 16 times leverage on commodity futures. So that means if you have 10 grand to invest with, you might actually be able to invest with $160,000 in the markets. And if you combine that with a successful risk minimization strategy like stop losses, you actually could be onto a good thing here. So I'm going to skip some of this tips and lessons of commodity futures, listening to how different products move faster than others. I want to go into options a little bit though. Options are another technique that you can use, again, not just to make more money, but also limit your risk at the same time, especially here. So look at this chart. So basically the price of whatever stock or commodity or anything you're buying is on the horizontal line here. So 5, 10, 15, 20, that's the price of the stock. As it rises, you will be making profit. But as it drops, you don't make indefinite losses. Your loss is capped. You can actually control how much you're going to lose, and you cannot lose more than what you pay for buying that option with. This is called a call option. There's also put options where you make money if something goes down. And if you're in the wrong direction, you're not going to have losses accumulate indefinitely. They're capped. You purchase this option for a fee. That fee is gone no matter what. But if you're right, you can make unlimited profit. But if you're wrong, you're only going to lose your initial investment to purchase that option in the first place. What I like to do, and I teach this, is to do both directions simultaneously. So you don't care if something moves up or if it moves down, you're going to make money. The only way you could risk losing money in that in particular instance is if the price doesn't move at all and it stays the same. But this is easy to do when there's an election or if a company is going through a lawsuit and they're going to announce a judgment that day. There's different ways to know, or maybe there's an earnings announcement every quarter, every company announces earnings. So that's something I did where I bought both directions of a company on the day that they announce if they're profitable or not profitable as people thought. So these are some actual trades I've done where I bought Netflix stock, and this is many, many years ago. And you can see here the value of the stock, that's the black chart here, was $455. This is before they split. And here we have the value of the put option, and here we have the value of the call option. So I bought both directions at the same time. One of them, you can see, went to zero, starting from $22, whereas the other one went from $22 all the way up to $118, representing a 425% return on that correct option, which more than made up for the losses of the incorrect direction. So this is actually with Netflix. Some of my students have actually made the exact same move with Netflix with their earnings announcement, just actually in the last quarter. So we made money on that trade too. So with options, you can buy both directions, and guess what? Sometimes the direction that you're wrong will not even go to zero and stay to zero. If you're buying both directions, and in this case, you have here something drop sharply on an earnings announcement, that put option that we wanted to go down made profit, whereas the one that we wanted to go up lost all of its value. But wait a minute, look at the calendar, May 6th, May 7th, May 8th. Within 2 days, the stock returned after we had sold our profitable put option, and our call option actually regained all of its value and then some. This is the same chart here showing more days, how much further the stock rose. So both the put and the call we sold for a profit. By buying both directions, we don't care what happens. We can protect ourselves no matter what. And maybe there's a chance sometimes that the other option that was wrong, we were budgeting for going to zero, actually doesn't end up closing at zero. We make money on that one too. So history repeats. This is a long-term chart of the stock market. Now that I've covered some of the reasons why I think that it'll go down, how much do I think it'll go down? Look at the orange horizontal line. It touches the peak. Okay, well, the indicator here shows that we had a crossover to the downside, during the tech bubble and the Great Recession. We have that now one fake one happened where it didn't negatively impact the market. They must have done a lot of stimulus with the central banks to avoid a catastrophe there, but we have it repeating right now. This is a chart I made today. So what that means, we're in store for some trouble. And how much can it go down? Well, look where we are right now. And look where we were before the recession and before the tech bubble crash started. Even just to get to that pre-recession and pre-tech bubble crash, we could still fall another 30% from here. I'm calling for actually a 30 to 50% correction. And this is why. The amount of money they're printing, dumping into the markets to prop this artificial bullshit market. I think that look what happened in 2008 when they paused temporarily increasing the money supply and injecting that into the markets. That almost caused a depression right there. So then they continued, they were forced to print more money. So those who don't study history are doomed to repeat it. Those of us that do study are doomed to watch everybody else repeat it. But I don't want you to be one of those people. I want you to learn how to protect yourself and be the one that watches everyone else rather than being the one that repeats the mistakes. So here is a person who just recently, November 8th, 2018, I drew a chart and I said a Yelp stock will move 12% after earnings. And my student here actually made money on this trade because he purchased both directions for this Yelp stock. We actually did something interesting. We said we wanted to go a little bit higher and then to the downside, and we were wrong. But the point is that the one that was correct, because we did buy some put options that we want to go down, we bought them for $1.49 and we sold those for $9.55 in 24 hours. So we didn't make 540% because we also lost money on the correct direction that was wrong, but we still made more than 100% in one day, which is not bad for 1 day of work. So having said that, here we're going to share a video of this particular student.
Yes, I'll go right ahead and share that with you guys. So here we go. We have Ed sharing his results, one of his top students.
Hey, everybody. Just want to give a shout out to Robert Paddock for showing us how to do stock options trading and how to short the market. As you can see, this year, the market has been rather turbulent. We have our times of up and, of course, times of down. And right at this place, this down spot, that was when we made a big move and we made a 38% ROI play. We took the profit from this play and we invested it into a couple corporate earnings report plays. This is one play we did where we bought both directions. Can you believe it? You can actually buy both directions. You can buy up and down. And we thought that Yelp was going to go up, but instead it went down instead. And the option contract we have for the down play made cover the money we put in and also made us some extra profit. So this was a very nice play we did. And here's another play too, with Netflix, where we bought both directions. The up direction, we made money. And then later on, Netflix started going down. And then we made money with the down contract too. So I want to just give Robert my gratitude for showing me how to do options and which options to do, because not every contract, not every stock, not every earning report would do that. But I know Robert has put in like hours of research like for every play, and I would not be able to get to where I am without his support. So yeah, you can see right here, right? This is the Netflix play I was talking about. We bought one contract. I didn't know whether it was going to work, right? And that one contract made us quite a bit. And then later on, it made more later on right here. So yeah, so if you want to learn market trading, I do recommend learning from Robert. And of course, when you do trade, trade with your own money and know your risk before jumping in. But your risk can be explained and made more clear with mentors like Robert. So I highly recommend looking for mentors like Robert who can help you with your market trading. So wish you all the best for your trading. Happy tradings. Peace. Hey, everybody.
That is phenomenal. In fact, basically, Ed Ewan profited more than 1,000% in a single week when he was basically picking in the wrong direction. So those are Phenomenal results. And I also want to show an example of how Robert actually made a prediction. So this is September 27, 2018. He predicted the all-time high for U.S. equities, which was the same week before markets turned lower for good. So let me just show you how he actually messaged his friend. And he basically said that on October 9th, 2018, while everybody was going out about their daily routine, Robert decided to film a warning for everybody to get on the sidelines. So here you can see that Robert messages one of his clients, Vince, asking him to use his TV camera so he can re-record what's called the most important message for the markets in 100 years. So I'm actually just going to go ahead and show you the prediction that Robert was able to make to warn the public for what's to come. So I'm just going to go ahead and play that for you guys.
A lot of people seem to be in a rush these days, but right now is an ideal time for them to slow down and take a look at the current state of the global economy. Maybe a boring topic, but it affects each and every single one of us. So, you know, most people don't even realize their pocketbook, wallet, and bank account is about to take a serious hit. They're too busy instead worrying about holidays like Halloween or
Seems like my internet is a little bit slow. So just give us a quick moment. But basically, Robert, maybe you could tell us a little bit more about the prediction you made here.
Yeah, sure. Basically, I felt the need to, watch everyone as they're during the daytime, rushing home from work and, going about their daily life like they have no clue what's about to happen. And here I was saying, you're going to have a lot of people losing a lot of money. Just in the month of October alone, $8 trillion was wiped off of people's portfolios. And here was I predicting in September to my friends and making even a video about it in October 9th, warning. And since then, we've even gone much lower. So as people start hearing about it in the news, they start talking about it like, yeah, I predicted it. But what they don't realize is I made these predictions when everyone else wasn't, or most people actually weren't. Some people were predicting it, but not many people had the guts to go against what everyone else was thinking and say it publicly and put their neck on the line and say, I don't believe, I'm a contrarian investor. I think everyone else should, just based on human nature, the fact that, there's a lot of herd mentality in the markets. Just by going against the grain, you're going to see a lot better results than everybody else by not being everybody else. A lot of people follow each other. You got to be careful who your sources of information are and where you get your info. Because if you, as a joke, I tell people, do you want to know exactly how to make 80%? Just go against what the bank tells you to do, and just go against what the TV tells you to do, and you'll be right 80% of the time.
That's phenomenal. So thank you so much for sharing with us your prediction. And so I wasn't able to play the full video, but we can definitely send that to you. So guys, I just want to, pause a little bit and get real with you, okay? Most of you guys, you get a paycheck each month and a percentage goes what? Towards movies, dinner. Now, we're not asking you to go into debt for this at all, okay? Some of this income that you're getting is actually called what I call disposable income, right? That we're using towards other expenses. So what we're saying is, instead of blowing on something that's going to be there, fade away, I'm asking you today to make an investment in yourself so that you can make more money, right? Have you guys ever read the book Rich Dad, Poor Dad? Remember Robert Kiyosaki? He talks about assets and liabilities. He said the poor people buy liabilities, right? They buy cars, they buy boats, the things that you put money in and basically disappears. That's why it's called disposable income. While the rich people actually put their money into investments, and we've been able to see how that was possible, and you turn that into more and more money. So all I'm asking today is to take some of that disposable income and actually turn it into an investment, as opposed to spending it on something where it's just going to take the money away from you. So let me ask you a question, okay? In the past hour, that you've been able to spend your time here with Rob, would you agree that it's been a time well spent so far? Drop a comment down below. Let me know yes. Okay, obviously you even saw Rob having to skip past some slides. We cannot possibly cover everything that you need to learn in an hour on this webinar, okay, even if we had all day. Now, we're going to give you a special offer so that you can get everything you need to know. And in fact, if you act fast, we're going to give you a very special deal, okay? Basically, what we're doing here is we're going to be putting together 100 times more content for those that wish to learn more. You do not need to learn everything, okay? I know that there's a lot of information, but in fact, if you just learn even one part of this, okay, you will be placing yourself at the top of the top 1% of all traders in the world, okay? So, you know, here's the thing. Old habits do die hard. Let me ask you a question. You guys have probably been on a lot of these kind of webinars in the past. You get excited, but what happens the next day? Probably nothing, right? It's sad because I just showed you guys a system to make thousands of dollars a day, and you're going to go back tomorrow and not do anything? Why? Because old habits are hard to break, okay? You're going to go back to work and do the same thing, and the only way to be successful is if we figure out a way to break that habit right now, okay? And that way, you can break this habit by investing in this course, okay? So now you can come here so I can help you, give you the tools that you need to become successful. But if you don't do that, unfortunately, you're going to slide back, okay? So everything that we just showed you in the past hour and a half will be completely useless just because you decided to slide back to that old habit. And the only way to break that habit is if you invest right now in the tools and in your future to take control back of your financial future, okay? Now this could potentially be you. This is another testimonial. As you can see here, he short the market, $150,000 profit by just doing a 5-minute candlestick, right? So that's basically the work that one of his clients did. And like Robert said, if you don't understand leverage, you're working way too hard. And we're going to teach you how to overcome that. In fact, I'm going to show you a quick video how one of his students actually created a trading software based on his predictions that now they're actually promoting to the public. So I'm just going to go ahead and share that with you guys.
Hi everyone, my name is Warren. I work in the exempt market, which is the lesser known of the markets. Our specialties are real estate development and development syndications. If you're watching this video, you've made the wise choice, as I did, to start listening to Robert some years ago and picking up on some of the hints that he was laying down, some of the predictions that he made, which we have used to help build some algorithmic trading bots for both standard and crypto markets. So these are bots that work well on both downtrend and uptrend, so accumulation and scalping. We've been putting these into practice in our crypto trading, which we are involved in heavily as potentially a hedge against a collapse or at least a correction in the markets, as Robert has predicted, and as have I. So I work closely with Robert, and this is a testimonial for his platform and some of the predictions that he has made throughout his career have really helped me get a foot in the door and build a successful career for myself, and also successful trading products that we now sell to the public. Thank you, and have a Merry Christmas.
So as you can see, there are people like Warren that are actually creating trading softwares based on Robert's predictions, because he's got a phenomenal track record of 70 to 80% accuracy. So, you know, there's a reason why companies are actually reaching out to him to help them create software. So here's what you guys are going to get, okay? Basically, the first module, we're going to teach you the mindset stuff, okay? We're going to teach you how to reach your your full potential, right? How it all starts within, how to achieve harmonic wealth, to live a purpose-driven life, how to the baby steps that you need to succeed, and how to basically overcome your procrastinations and implementing some powerful affirmations. We're going to teach you how to budget, how to save time while spending more. how to save your money rather. And we're also going to put together a retirement plan for you. So, you know, like Robert said, 20 years ago was best, but today is the second best time to start. We're also going to teach you how you can think, right? So we're going to dive into some psychology, okay? Whether you think you can or whether you think you can't, you're right. So, you know, we're very passionate about the psychology of being an entrepreneur, right? We're going to help you push through those comfort zones. We're going to help you overcome some of the childhood events that have basically impacted your current decision-making abilities. Okay, and we're also going to be just giving you a source of information. We're going to show you how to seek several sides to every story rather than trusting one, how to basically make decisions way more confidently. We're going to do some conditioning, right? So basically what you say is somebody is controlling what you learn and you don't learn. So we're going to recondition you. We're going to create some paradigm shifts. And also we're going to show you how you'll have 10% of the net worth with your closest 5 people. And that's why we have this, this community here online, so that you can be surrounded by the best type of people. And we're also going to be doing some reprogramming and organizing your thoughts. So we're going to dive into some mindset stuff, and let's get into the wealth. So we're going to teach you compound interest. We're going to teach you how to get a return of your investment. We're going to teach you taxation, right? So are you working 4.5 months just for free to pay Big Brother? Right? We're going to talk about the types of income. So 1 minute of thought can change the way you live for the next 5 years. The employment and the education system, okay? We're heading full speed towards the dead ends because unfortunately the public education system does not prepare us for financial success. So that's basically, you know, $100 to $2,100 value. But now we're going to dive in deeper into some basic wealth principles, okay? We're going to show you how to get paid from the 1% of efforts of 1,000 people versus 100% of your own. We're going to go over into good debt versus bad debt, the consumer debt that will cost you, and basically investment debt will make you rich, okay? And hopefully we've delivered and showed you how that was possible. The next thing we're going to show you is market manipulation. Okay, this is very powerful stuff. We're going to show you how the Federal Reserves work. Neither the federal nor has it any reserves. So basically, we're going to talk about what their impact is in this market manipulation. We're going to dive deep into the financial industry, right? How brokers actually get paid bonuses to make you broker, okay? We're also going to discuss the banking industry, what your bank will never, ever tell you, and we're going to basically break down those secrets. Fractional reserve banking, right? So without it, rather, wars cannot be financed. It's a very interesting fact. We're going to discuss the gold standard, so the oldest and the most stable currency in the whole history, as well as inflation. Everything that you've ever knew just went down the toilet. And I hope we've kind of showed you, you know, what we really mean by that. The next thing we're going to teach you is Module E. We're going to teach you about the economy, okay? So the economic numbers and indicators, what they distract you with, the supply and demand, the unbreakable law, the predictable cycles and patterns. So basically how to get rich from repetitive statistics, the contrarian investing, that's what Robert likes to call himself, going against the herd mentality and being the wolf in this industry. And everything is linked together. When something moves, guess what? Everything else moves too. We're going to teach you global markets and the economy, how technology shrinks the world, and know where to invest. The economic predictions like we've just seen Robert do, so we can show you where to put your money to prosper while protecting it. The next module we're going to teach you is risk, right? How to minimize your risk. Knowledge, right? So the most valuable commodity there ever is your knowledge. That's why it's important to invest in your education. We're going to define for you what risk is. So just forget every other definition that they try to make you believe. We're going to give you the real definition. We're also going to cover the 4-to-1 risk-reward ratio, the #1 golden rule for every single investment class. I'm telling you, you cannot miss this. We're also going to go over into deeper detail on stop losses, and basically they stop your losses to make the previous chapter possible. So we're going to show you how to do that. We're also going to cover dollar cost averaging, so how to profit even when you are wrong and making mistakes. And we saw Ed do that, and you saw that here with your own eyes. We're going to teach diversification, how to diversification can kill your portfolio, okay? We're going to be over conservative and show you how the single most common financial mistake that you can actually avoid. Now, the next module that we're going to show you is the investing basics, okay? So is investing right for you? Before getting started, what you need to know first, so we're going to start with a simulation portfolio, starting amount, return on investment, and the time you need to put in. We're going to lay out the rules of the road, okay, how to buy low and sell high in both up and down markets, how to read stock quotes, yes, yesterday's closing price, placing your first stock trade, how it works, symbol, share, quantity, price, and the types of orders, okay, placing it in the right transaction, market order, limit, stop loss, trading, and put and calls, as you've been able to see a glimpse on this webinar. We're also going to teach you the investing basics. So like I said, this is just continued short selling, how to sell something that you don't even own yet. Pretty powerful stuff. Investing with confidence, what the pros know, understand, and put into practice. And most of the times they don't tell you. But Rob is going to deliver that for you. We're also going to go into the market mechanics, the history of the mechanics, how and why markets came about, the market system, how the markets function, the market and economic flaws, the mistakes that you need to be aware of, the regulatory bodies, the enforcing the rules, and you also need to know what frauds exist, what scams exist, and the insider trading, Aaron, Madoff, and Goldman Sachs. Okay, very important stuff. We're going to teach you market manipulation, how prices are actually artificially inflated and suppressed. And we're also going to show you how to protect yourself and all of your money. Pretty good stuff here. And also, we're going to go dive deeper into the trading styles. So what the pros know and what the financial planners will never tell you. The trading time frame. So the best time of the day to trade. Okay. In fact, Robert said that you could even trade with as little as 20 minutes a day. He said that there are specific time frames that you should be looking for. You're not trading all the time. You're looking for the best time to trade. We're going to discuss income versus growth. Which do you prefer? Value investing. Warren Buffett waited 15 years to cash in with Coca-Cola. So we're going to talk to you about when is the best time to actually cash in with your investments. Momentum trading. So what goes up continues to go up, right? So the trend is not your friend, and Robert's going to reveal to you exactly how that works. Swing trading, to the point where even a 5-year-old can do it, okay? So even if you're brand new, this is something you can do. We're going to teach day trading, basically the trade that he placed that made him $12,000 in just 8 minutes. Pretty powerful stuff. Basket trading, the Easter Bunny's favorite, and investing network, okay? Can you see right now, right? Do you see how even if you learn one strategy of how this would put you in the top 1% of traders, most experts don't even teach you half of what we're about to deliver to you. Okay, so who has this actually worked for? Well, the first type of person is people who don't have time to watch the markets, right? The second type of person is someone that, they're tired of their broker making them broker. Who can agree with that? And the third type of person is people who want less risk during a recession while even profiting from it. So we're going to teach you not only how to survive it, but also how to thrive within it. So listen, guys, we had two choices, okay? The first thing is we could have made this as cheap as possible and try to sell as many courses as possible, but it really incentivizes us to really take the time and stack the value in here. So the second option is, yes, it requires a little higher investment, but in exchange, we can devote more resources so that we can actually guarantee your results. Okay, so these are real people with real results. You can see here, due to one of the oil crash shortages, basically what happened is Vince made another $7,000 profit. Okay, so this is what you're going to get. Now, this is actually this alone is worth the entire course, okay? Module J, we're going to show you how to consistently outperform the markets with a 70 to 80% accuracy, okay? So take a look at this. We're going to teach you the top down and top up approaches. We're going to show you portfolio style, so selecting your cup of tea, how to get into momentum, basket, day trading, and swinging. Then we're going to show you the geopolitical analysis. Everything around the world is obviously linked together, so it does impact your trades. The fundamental analysis, knowing what others already know, and an introduction to fundamental analysis. So let me just go a little deeper. So basically, we're going to show you how to trade, how to read financial statements, how to do PE ratios, earnings, dividends, and analysis forecasts, and much more, okay? So very, very powerful stuff. And we're also going to teach you the tech analysis. Now, this chapter alone is worth $10,000 back in 1980s, okay, just to give you a perspective. We're going to teach you how to read charts, entry, exit points, target, triggers, Elliott wave, and a whole bunch of stuff. So basically, we're going to hold you by the hand and teach you how to do all of this, okay? And we're also going to show you, I know we didn't have time to go over into detail, but trading patterns, setups, utilizing statistics and probability to gain that trading edge. And we have several different methods to achieving that. And basically how to put it all together, because after all, it is the glue that makes it stick. We're going to teach market mechanics, fundamental analysis, and technical analysis. Okay, so a lot of value, guys. We really wanted to just over deliver. Now, this is really powerful. Okay, we're actually going to show you at this point, you're ready to choose your investment vehicles. We're going to compare all tradable products, leverage, liquidity, volatility, profit loss potential. And we're also going to warn you about the bad investment vehicles that exist out there, such as bonds, mutual funds, and money markets. Then we're going to dive into stocks, how a $10,000 investment into Google would have now been worth $100,000, and how you can, basically catch that wave. We're going to discuss options like how we did on this webinar. Make money when something moves, no matter which direction it goes. We're going to show you exchange traded funds, okay? Managed portfolio funds, commodities future, which basically is known as the golden opportunity. Currencies, you might know them as Forex, how money makes the world go around. Tangible assets, so we're talking about physical products with intrinsic value, okay? So that chapter alone is extremely valuable. And last but not least, we're going to show you things to keep in mind. Remember your goals and risk tolerance level. Chapter 2, we're going to go over into a written trading plan. In fact, it is going to be one of our bonuses that we're going to give you, because you need to have it on paper before you actually trade. Okay, you're going to learn discipline, the prerequisite you need to trading. Little or no discipline, and then if you don't have it, don't trade, right? So we're going to teach you that discipline. Self-assessments to make sure that you're prepared. The common mistakes, so you do not want to get trapped in emotional investing. And the final thoughts, survival is the name of the game, okay? So guys, just because you're here on this webinar and you've been sticking around to the very end, we're actually going to throw in a bonus, okay? So because we are in pre-launch right now, this course will actually be charged $197 per month. Okay, which basically amounts to $2,364 per year. But for those of you who get started today, for the first 30 people, you're going to be able to get lifetime access. You'll never have to pay a penny again towards a monthly membership. But basically, we're going to go live every week, and we're going to show you the 7-figure trading strategy that you can apply to any account. Okay, last time we did this, we had a student make $5,000 profit in 6 minutes. This is an opportunity to interact live with us and ask us questions, right? We need feedback. We're also going to throw in the written trading plan template for the first 20 people that get started. This is a $497 value. This is going to help you avoid costly mistakes, guys. This is an in-depth trading plan that you can use as an outline to avoid these mistakes. So, like Rob said, if you're driving from San Francisco to New York, you can make it there without a roadmap, but guess what? It might take you a little longer. So having a written trading plan is a must for market traders, that if you want to be in the top 1%, okay? So this is only available for the first 20 people that are taking action right now. And we're also going to throw in 2 personal consultations. Guys, this is extremely valuable because Robert's actually going to spend that time with you. This is a $997 value. This bonus is available for the first 10 people. Let me just tell you this, guys. People have paid him $10,000 just for even an hour of his time. So the fact that he's going to spend, 2 consultations with you, a total of 90 minutes, where basically, he's going to do a discovery call. He's going to create an in-depth, done-for-you, tailored strategy. This opportunity for you to not only pick his brain of a market trader expert, but also receive over-the-shoulder guidance and feedback on implementing the strategy that he lays out for you. Because guess what, guys? A lot of people out there, they don't know how to trade. And if they do, they probably won't teach you how. And, you know, they usually charge a lot for this kind of stuff because of the potential profit that we can make. So let's just, you know, sum it up. These are all the modules that will be giving you access to how to reach your full potential, valued at $197, basic wealth principles, valued at $397, how to think like an entrepreneur and a trader, valued at $297, module D, the market manipulation, valued at $497, the economy, learning how the economy works, valued at $597, the investing basics, valued at $497, the risk, understanding that and how to minimize that, valued at $697, and the market mechanics, valued at $649. We're also going to show you how to pay attention to the trading styles. It's valued at $997. We're going to show you how to consistently outperform the markets with a 70 to 80% accuracy. This is alone is a $197 value, and how to consistently, basically get confident results and trade with that certainty. Again, we're going to show you the investment vehicles. This is probably one of the most important things that you can learn. Now that you've learned the techniques, where do you actually put your money in? And we're going to show you basically, you know, how to maintain these results, investing and you. So these are the bonuses that we're going to show you guys. Okay, lifetime membership. You're going to get access to weekly training. This is over the guidance, over the shoulder feedback, so that you don't make any mistakes. Okay, we're going to show you a written trading plan template that is tailored for you, as well as 2 personal consultations. You're going to learn strategy and implementation. Okay, so basically this whole thing is valued at $16,247. Now, let me ask you a question. If all this did was teach you how to profit during a recession, or even worse, a depression, would it be worth it? What if, you know, it taught you how to make money trading regardless of the direction the market moves? Would this be worth it? And what if you could just learn how to maximize your profits if you are of the belief that the shape of the world economy is in trouble and markets are about to tumble? Would this be worth it for you? Okay, just think about this. What's one bad trade worth to you? One mistake, right? One trading mistake. We heard Robert, it's cost him thousands of dollars, $3,000, $5,000, $10,000, or even more. How much would you pay to get a steady returns with at least a 51% accuracy? Okay, so, you know, you can see why others are actually paying Robert $10,000 to personally teach them how to trade. And what we're offering is a lifetime access. Now, this is only available for the first 100 people because we're trying to get some testimonials, okay, of successful traders. So when I say 100 people, I'm not talking about the bonuses. I'm talking just about the course itself, because here's the thing. The price will go up as of January 1st, 2019. And we are not guaranteeing those bonuses will be available at that point, okay? So if you were to avoid just one bad trade due to our lessons, then honestly, the $16,000, that would be, you know, even that alone would pay for a lifetime access to the ongoing mentoring that you're going to receive here today. And we're not bullshitting you guys, okay? This is industry standard pricing. As you can see here on Day Trade Review, you can see that most programs, they charge $15,000 for 1 year and then an ongoing $5,000 per year afterwards. You can see that most companies actually charge $25,000 for lifetime access. So we're not just pulling these numbers out of nowhere. You could go ahead and look it up yourself. Okay, so you can see why even offering it for $16,247 is actually a great deal in comparison to industry standard. Now, for the general public, when we go live on January 1st, 2019, we are actually going to release this for the price of $1,997. But just because you're here today and you stuck to the very end of the webinar, we're going to allow you to get started just for $997 today, okay? And you can see that this is actually a massive bargain because our brand is, we want to create success stories. That's what we're passionate about. We want to show that how, you know, it doesn't matter what level that you're at, whether you're a rookie, an intermediate, or sophisticated trader, you can get started today for a very small investments. Okay, so pretty powerful stuff. And guys, if we haven't sweetened this enough, okay, just to make this an extremely irresistible offer, you saw how Robert was able to actually get on the news for what he was able to predict and invest in real estate investing. So we are about to release a course, and this is only for the first 5 people, okay? And this is not some scarcity BS. We're sticking to this. This course, when we are launching it in early January, early February, is going to be valued at $1,997. And I just wanted to actually share a little story of how Robert helped one of his students buy 4 properties in 2 months with only $10,000. Okay, and guys, the reason why I'm sharing this with you is because you can use your profits from this to use it towards trading. So Robert, just go ahead and unmute yourself and talk about this mentoring story.
Yeah, well, this started back in quite a while ago, 2010, I believe, when we had the Olympics in Vancouver. I was actually holding seminars in Vancouver, teaching about real estate investing and techniques to be more efficient. I have that same theme across all asset classes. I don't like to waste time. I don't like to buy something and hold it for 10 years if I can make that same return in 1 year. So what I did is I was doing a seminar. People started to see my results. Already they were attending because they heard me, my name is the speaker. There were literally people sitting on the floor of these seminars in Vancouver back in 2010. One of the attendees came up to me afterwards and said, listen, I want to pay you $10,000 to teach me how to invest in real estate. And I shit you not, that's literally what he said, word for word. I took his email address. I never contacted him. Fast forward a couple days later, I saw him sitting in my office at my desk. I said, okay, this guy's serious. He really wants to learn. I have a chance that he'll actually take action, because I don't like teaching people that are not actually going to implement what they learn and use it to better their lives and, you know, eliminate the suffering, the struggles, and actually do something with it. I want people to use my knowledge. I want people to take what I've learned over so long and actually use it to their advantage. I want that. I know that success is giving back to people and first helping as many other people as possible be successful first. So this particular student, now that they're sitting at my table, I said, okay, I'm not gonna, what we're gonna do with your 10 grand is come and meet me in the one target city. This was a test to see if he'll actually show up, to go all the way across the country to the best market where I identified at the time to buy properties was. And in this particular city, this one here was Windsor, Ontario. So yeah, we bought 4 properties for this student with his $10,000 in a matter of 2.5 months. He actually drove out there. I had to fly in after, and we got a hotel room with 2 beds, and I taught him step by step. He was only supposed to stay there for a week, but he saw every single day how much he was learning by having my guidance and holding him by the hand and showing everything how we do everything with contracts, negotiating, finding deals, financing deals. He did so much activity that within 2.5 months, he was the owner of 4 properties, and you can actually see them all on here. As well as 3 months later, we were at the bank here and we were holding a check together. We pulled out $50,000 in cash on this check after 3 months of buying his first property through my mentoring in real estate. So we owned this 10-plex, this 4-plex, he had this duplex and this other duplex. And that led us to also buying these 2 more properties on the same block of 20 units each for another 40 units. That all happened in the span of about 6 months. So we definitely want to stress that we know the game. We're not talking about learning from a book here. You can actually learn by doing. And that's what I stress, and I want to help as many people as possible.
Thank you so much, Robert. And the reason why I partnered up with you is because you are somebody who doesn't just tell people what to do, but you actually show people what to do, and you lead from the front lines. And the reason why we're offering, you know, this course for you when we release it is because we want to help you become cash flow positive, so you could take your returns potentially from real estate and put that back into day trading. So it's all interrelated, and we're just doing this to really over deliver to you. And I'm telling you, this is only available for the first 5 people that take action now, because we are charging $1,997 for this course. So you basically get, right, core access to 2 courses for the price of half of one. that I can't think of anybody else that's doing this out there. So you can get started today for only $9.97. So if you are on this page, just click the button down below and get started today, or you can just go ahead and click start.investingnetwork.com, and I'm going to show you exactly how to do that. Now, guys, let's take a look at these scenarios. We could be wrong, okay? The markets could crash, could not crash, rather, and it could continue rising instead, okay? But we see the biggest crash in history, okay? Now, me personally, I would way rather prepare for the worst, you know, and hope for the best. And as you have seen here on this webinar, you know, we are seeing multiple signs of what's about to come, and you will be well pre-positioned to take advantage of this massive opportunity to profit. Okay, we're not just talking about protecting you, we're helping you actually profit in this crash, because you are going to be on the receiving end of everybody else's losses while also protecting your hard-earned nest egg. So, you know, you're basically going to, you know, yeah, okay, you'll make an investment of $9.97. You could say that's a risk, but you're going to miss on a once-in-a-lifetime opportunity to create generational wealth for you and your family and even your grandchildren, okay? One day you're going to look back at this and you're going to ask yourself, why? Why didn't I see the warning signs? Why didn't I shuffle my assets like Rob told me? You saw how much not listening to him costed one of his previous clients, right? So he's going to teach you how to shuffle your assets in such a manner so that you can actually profit during the greatest transfer of wealth in human history. Now, you got two choices, okay? Let's be real. Option one, you could do nothing, okay? And not take this leap of faith, which by the way is 100% risk-free. Or you could do the second option, pony up this small, tiny investment today compared to the value you're going to get in return, and just give it a shot. Just give it a try. Honestly, this is a no-brainer. You can't afford not to try it. Okay, now here's what my guarantee to you is, okay? If you sign up today and if you don't like what you have to see, I'm actually going to make this guarantee. I'm going to refund it to you. I don't care if it's 29 days, 23 hours, and 59 minutes from now. Just let me know and we'll give you our money back. But we got to make a deal here, okay? You have to either attend or watch the replay and implement the strategies that are taught in these 30 days. And we can see your login and the time that you've actually spent to watch the trainings. And if you're still not satisfied with your results, guess what, guys? We will refund you, okay? Does that sound fair enough to you? Pretty easy, okay? So the real question is, you know, is it really worth, you know, gambling a few minutes of your time just to check this out, right? Because that's really what you're quote unquote potentially losing is your time, which even if it does half of what we've claimed that it could do on this webinar today, it will pay your investment 5 times over, because you saw, you know, our client make $5,000 in just a matter of 6 minutes. Now, you know, if you take a look at what other opportunities exist out there, guys, it can take 3 to 5 years to get back your initial investment. Forget about even profiting. And I know this personally because I had a traditional brick and mortar business. Now with this, you could potentially get back 5 the return, 5 times back your return. So, you know, here's the tale of two people, okay? There are two kinds of people in this world. You know, they both show up to these webinars. And the first type of person is kind of timid, nervous. You get on here, yeah, you think it's kind of cool. They want to do it, but they just take no action. Now, I don't know about you. I don't want to work with these people. Why? Because they're never successful. So I don't really want to attach my name, my brand to those kind of people, because we're about creating a brand around success stories. The people that I like us and that really get us going is, you know, people like us. They get it. They understand. And they step up. Boom, they make it happen. So my question is, you know, are you this guy or are you this guy? Now, you know, this guy is probably hung up on the webinar. I'm sorry. I don't want to make you feel any more guilty than you already do. But if you're ready to take some massive action in your life and do some cool stuff and change your life as well as others, if you want to join us, okay, then here's what you got to do. I'm going to show you what to do next. So I'm just going to quickly exit this, okay? It's very, very simple. You're just going to go to this website. You're going to type in here. I'll just do it here live with you. Start.investingnetwork.com, okay? And it's going to take you to this page, as you can see right here. I'm just going to pause that because we're already on this page. You're going to scroll down below, and guys, we're going to only offer this course for this price up until December 31st. So you got only 4 days, but I would encourage you guys to take action now if you want access to all of those 4 bonuses, including that massive valuable real estate course. I'm telling you guys, you cannot miss that. Even if you don't care about stocks alone, and if you want to do just real estate, you can get started here today for $9.97. But here's the deal, guys. I'm going to do something really special for you guys. Like I said, I'm going to sum it up. What are you actually going to get? In fact, I made a very beautiful page, so I'm going to show you here. Okay, you're going to get access to all our entire market trading academy that has taken Rob 2 decades to put together of, diligent research and, experience from the trenches. Okay, this is not stuff he got from a book. He learned from, real life experience. And like I said, we're going to throw in the Real Estate Investing University course, okay? That's only for the first 5 people for the value of $1,997. We're going to throw in a personal consultation, both strategy and implementation for the first 10 people, guys. That alone is worth this course. We're also going to give you the trading written plan template so you can avoid the most costly mistakes. That's only for the first 20 people. That's valued at $497, as well as lifetime membership. And I'm not kidding you. As soon as January 1st hits, you will have to pay a monthly membership to get continued mentoring. But this is your one and only opportunity to get $2,364 value of over-the-shoulder mentoring. Guys, you're going to get lifetime access. You'll never have to put down a penny again. As you can see, this academy is worth $18,000, okay? So that's because we really want to create results. We're all about creating success stories. And, just to make it easier for you, okay, if you didn't sign up immediately, this is probably what's happening through your mind, okay? First thing you're thinking is, I don't know if this is right for me, right? Well, you know what? You're right. If you want to stay in the rat race and you enjoy commuting in the rush hour traffic twice a day, you enjoy working for a boss who doesn't appreciate you, you like working hard for money instead of having money work for you, right? And you believe in a thing called quote unquote job security, and you think that the government will not run out of money taking care of everybody to avoid having to work until you die. If that's what your belief systems are, you're absolutely right. This isn't for you. You might as well just go ahead and X out this webinar, okay? But you might have another reason. You might think, well, do I really have time to learn and how to invest? Well, the chances are listen, it's not a matter of time. It's a matter of prioritization, okay? Because we have shown you guys how people have been able to make $5,000 profit with just 6 minutes, okay? So the real question is, if you're somebody that doesn't have time because you work 8 hours a day or more, then you actually need this education the most, right? Imagine if you started investing just 10 years sooner, where you would be today, and you wouldn't have way more time freedom. So the way I think about it, do I invest 8 hours a day to build somebody else's dream? Or do I invest at least 1 hour a day into my own dream and my own family's future, right? So it's really a question of priorities rather. And another thing is, you might say, okay, I don't have the money to invest in my own education, right? If you're like, that's like basically saying this, and I'm laughing at this, and me and Robert were talking about it. That's like saying, listen, I'm fat, and I'm going to say that I'm going to begin working out after I lose the 20 pounds. It doesn't work that way. It doesn't make any sense, right? So the most valuable commodities on earth, are water and education. And guess what? You need both to thrive. So by learning wealth generating and preserving principles, you'll be on your path to never have to say this, I can't afford something again. And, just because you're here, I want to let you know that anybody can do this. Our previous students, they had zero experience. Many of them actually worked full-time jobs while trading. And most people actually had less than 1 hour a day to learn and trade. I work with single moms all the time that are literally running around with 7 hats, and they don't have a lot of time. But guess what? They made this happen. They've still been able to retire from investing just 1 hour a day of trading versus 8 hours a day at a freaking job. Okay, so it's not a matter of time or experience. It's a matter of, are you fed up enough? Okay, how bad do you need your situation to get before you finally decide, I need to make a change because clearly what you've been doing up until now obviously hasn't been working. Otherwise, you would not be on this webinar right now. Okay, so what are your priorities? So these are real people, real results. Here we have Justin. He said, I met Robert when he was day trading in high school between classes. I've had the privilege of hearing his market predictions for almost 20 years now and have proven accurate time and time again. I managed to capitalize on his accuracy by taking some of his predictions, which he just posted on Facebook, and I called my financial advisor to tell him what to do, resulting turning my $5,000 into $15,000 within a single year. And as you can see here, he's really enjoying his time on vacation, guys. These are real people with real results. Okay, so you can do this. This is what you're going to get, an $18,000 value, right? And like I said, for the first 10 people that take action right now, we're going to give you 2 90-minute phone conversations with Robert himself, diving into strategy and implementation over the shoulder. We're also going to show you that for the first 5 people, the entire real estate investing university. This is going to help you produce that extra cash flow so you can actually have money to trade with. So you're not actually using the money that you're creating at your own job, but you're actually diving into another market to produce that cash flow to trade. This is only for the 5 first people. And listen, I'm really going to eliminate all your bullshit excuses, okay? I'm going to actually split this payment in half, okay, so that you can get started today. Okay, it says $549. We were going to do $597. We're going to leave it like this because this is the way the slides are, okay? You can get started today just because I'm feeling freaking generous, and you're lucky I had an error on my slides. But for 2 split payments, you can start it today right now for $549, okay? I'm going to make sure that that's what we're going to provide to you. And I'm going to reward you. I'm going to reward you for being first. So guys, take action like your life depends on it, because guess what? It does. So I'm just going to go ahead and stop sharing my screen here. Come back and say hi to you guys again. I just want to say that I really appreciate all of you for coming and joining us on this value-based webinar. And the reality is this. You're probably one of 2 people. One, you're probably at a breaking point where everything that you've done up until now has not been working. And there's something deep down where you feel that you're not actually fulfilling your full potential. You feel incomplete. You feel worth more than this. And deep down, you have this feeling that you're not meant to just work like a slave in a freaking cage, right? To the day that you die, just so you can pay your bills and just basically make a simple living. You're put on this planet to win. You're put on this planet to deliver value. You're put on this planet to enjoy the time that we have, because time is something we'll never get back. Money is a renewable resources. I just came back from Romania to visit my grandpa, who's 92 years old, on his deathbed. Why? Because now I have the time freedom to make those emergency trips, to spend that time with the people that I love and care about, because you'll never get that back. So if you're that kind of person, you're going to take action, because time to you is worth way more. Or you might be a person that's in transition, where you feel like, you know what, I'm drawing the line in the sand and I'm saying enough is enough. I can't take this anymore, right? I'm tired of this job that I'm having. I'm tired of spinning my wheels trying to figure this thing out. And I'm actually going to link arms with Robert and Iulia so that I can actually become one of the top 1% of traders, so I can change my life today. The moment is now, my friends. You don't have to wait until 2019 to make a difference. So which person are you? Are you an action taker? Are you going to be someone that's going to have to watch what we do, right? Because we're going to do this with or without you. And you do not want to be one of those people that made a big mistake by not following Robert. So if you're here right now, you're here for a reason. And your purpose is to live, and to live in prosperity. So take action, because I'm telling you, it'll be the best damn decision you've ever made in your life. So with that, thank you for joining us. Robert, if you want to say any last remarks, go ahead and please do. But we love and appreciate you, and we'll see you live on the training. Ciao for now.